Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi Barajan, currency analyst, and today is Monday, December the 18th, 2017. Today we're going to be looking at the dollar yen, the euro dollar, the pound dollar, and the euro Swiss franc pairs. Dollar yen is currently in neutral bias. We can see RSI is flat at 50. There is immediate resistance coming from the 50% Fibonacci retracement of the down leg from 114.73 to 110.83. It's also where the 50-day moving average has currently flatlined. So that region around 112.80 is proving to be a strong resistance area. We would need to see prices targeting the earlier December peak of 113.74 in order to regain sufficient upside momentum to retest the 78.6% Fibonacci at 113.90, as well as the November top of 114.73. Failure to beat that top of 114.73 would mean that the medium-term neutral outlook will hold for a while longer. To the downside, we are seeing immediate support at 112.30, that's the 38.2% Fibonacci, as well as the 112 level. We can see the 112 handle proved held as a strong support area 3 times over the past week, and below that we have the 200-day moving average at around 111.60. If prices were to drift further lower, we could see the 2.5 month low of 110.83 from back in November coming into focus again. A breach of that level would shift the risk back to the downside. Moving on to euro dollar, we can see the euro dollar is also neutral in the near term. RSI is also just at 50. The intraday bias is to the upside, but we are seeing resistance coming from the 38.2% Fibonacci retracement of the up leg from 1.1553 to 1.1960. If prices were to accelerate further, we could see the 23.6% Fibonacci retracement at 1.1865 coming into focus again. That previously acted as resistance earlier in the months, but for greater upside momentum, we would need to see a challenge of the November top of 1.1960. In the medium term, the outlook is still neutral. If prices were to head lower, at the moment we do have immediate support coming from the from around 1.1730, and just below that there's the 1.17 handle, which is the 61.8% Fibonacci retracement. Breach of that area, we could see prices heading back towards the 3-month low 1.1553 we saw back in November. A breach of that low could shift it could mean resumption of that downtrend, which was interrupted in November, and it would risk shifting the medium-term outlook to a bearish one. Let's look at pound dollar now. We can see also another neutral picture here. And like euro dollar, there is intraday upside momentum. RSI is just above 50. We saw strong support coming from the 1.33 handle over the past week. If that holds and the upside momentum gains some further traction, we could see the November peak of 1.3549 coming into close view. That's just above the 78.6% Fibonacci at 1.3520. But if the pair is unable to challenge that high again, it's unlikely it would be able to gain sufficient momentum to retest the 50 months high 1.3656 we saw back in September. To the downside, a drop below the 1.33 handle, we could see the 38.2% Fibonacci at 1.3265 being the next key support area, as that's also where the 50-day moving average is currently moving towards. A drop below the 50-day moving average would shift the near-term bias back to the downside and could accelerate declines towards the bottom of the current range at 1.3026, and we can see the 200-day moving average slowly moving towards that bottom of the range around 1.3026. So if you do see further weakness for pound dollar, the 1.30 handle will be the major support area to watch for. And finally, moving to Euro Swiss franc, we can see that there has been very strong resistance coming from around the 1.1720, 1.1730 area, as it's failed several times to have a sustained break above that area. Then the medium-term outlook is still bullish. We can see that longer-term uptrend is still intact, and we also have that big gap between the 50-day and the 200-day moving averages. But in the near term, the outlook, the near-term bias is neutral. RSI is flat at 50. We could also see declining momentum in the medium term as well, with the MACD moving below its signal line. At the moment, there is support coming from the 23.6% Fibonacci at 1.1615. A breach of that level, we could see prices then targeting 1.1585, and below that we have 1.1525 level to watch for. To the upside, we can see several resistance areas, the 50% Fibonacci being an important one at around 1.1650, although it is currently trading just below that. The intraday peak was at the next Fibonacci at 61.8% retracement of the down leg from 1.1721 to 1.1584 at around 1.1670, and then above that we have 1.1690 and the near 2-year high 1.1736 from late November. A break above that, we could see the next target on the upside coming at the 1.18 handle, which is the 161.8% Fibonacci. That's it from me. Thank you very much for watching, and have a great day.